NVIDIA's first quarter profits came in higher than expected. The chipmaker also raised guidance, and Wall Street basically shrugged, Jason.
Well, I mean, it's been a tough past 12 months for the company. It's been a good start to the year. I think this is a good business. They're dealing with a stretch of challenges, albeit they were some self-inflicted. But looking further out, though, I think there is plenty of reason to be optimistic about the potential there. I mean, you go back to the inventory problems that really, we started to see signs that there might be something in Q2 of last year. Q3 is where they really materialized, and that's when the stock kind of fell off of a cliff. But those were some inventory issues. They're working through them. The T4 GPU is gaining some traction from some big names out there. They announced a big acquisition during the quarter with a company called Mellanox. It's going to be a $6.9 billion all-cash acquisition. Mellanox is a network tech company. I think there were some challenges in crypto. You only heard crypto mentioned once on the call this quarter, so I think they're getting past that. But the outlook for the year is still a bit tame, as data center spending is on pause and gaming is facing a little headwinds. I think there's some big implications for this company down the road, though, in augmented reality with headsets and their Drive platform. So big business, generates a ton of cash. They're going to keep on reinvesting a lot of that cash back in R&D, which means they'll be a major player in this space for many, many years to come. I actually am pretty optimistic about where they're headed.
Alibaba's fourth quarter revenue rose 51%. Profits came in higher than expected, and shares of the e-commerce giant stayed flat for the week, Ron.
Yeah, concerns about slowing growth. But as you point out, the numbers are pretty impressive. 51% growth in revenue. That's a big number. Investments in cloud computing really paying off. That unit was up 76%. Still only accounts for 8% of revenue now. But they are now the third largest cloud service provider after Microsoft and Amazon. They've got 40% share in China. So clearly those investments are paying off. Their core commerce business up 54%. Advertising and fee revenue up 31%. Adjusted earnings up 50%. These are really big numbers. Stock's only trading 26 times for numbers like that. It's not that expensive. And as you said, the stock is off about 12% in May, but still up 24% for the year.
Is it safe to assume, particularly when we're talking about tech giants like Alibaba and Baidu, that the ongoing trade talks and tensions between the U.S. and China, they just don't go in the plus column for businesses like these?
Yeah, it's interesting. We talked about Walmart earlier. They're more concerned with what's going on than Alibaba is. Alibaba in the call and in the press release kind of poo-pooed it and said they're not too concerned about it. They think it's going to work out.